Hey everybody, welcome. Today we're going to take a look again at the Bitcoin price, running a power regression trend line over it, as well as some standard deviations or percentile bands. All right, so we're going to come back here to Bitcoin. We're going to come back to the best trend line that we can layer over the Bitcoin price over the last 13 years. We're going to move away from the gold and silver charts that we've done over the last few videos. But if you haven't seen anything about trend lines, regression analysis that we've been doing here, definitely please do check out my earlier videos. We go through all the four basic regressions, trend lines, linear, logarithmic, exponential, and power curves. We've looked at gold, silver, and Bitcoin. And we've done enough talk on gold and silver, I think, in recent videos that we can get back to Bitcoin. Gold, silver, and Bitcoin, all unique monetary assets, gold and silver throughout the millennia. Bitcoin only for the last 14 years in the digital age. Very, very interesting asset. So let's take a look at it. I'm putting some basic timeline events here. Of course, we have the Genesis block, January 3rd, 2009. We have Laszlo trading 10,000 Bitcoins for 2 pizzas, the famous first recognized Bitcoin barter deal. Bitcoin Pizza Day, May 22nd, 2010, sub 1 penny Bitcoin price. Then we have the MT Gox hack in early 2014, where Mark finally lost or recognized the loss of and the wallet mismanagement of about 650,000 Bitcoins. It was actually thought to be 850,000 Bitcoins at the time. Apparently he found 200,000. It's a lot of Bitcoin at the time. Of course, this is a much lower dollar price, $600 Bitcoin price at the time, $800 Bitcoin price at the time. But as we see the price of Bitcoin rise throughout the next decade, this turns into a lot of money. And it shows the importance of Bitcoin as a bearer asset and not trusting centralized exchanges with your keys, with your Bitcoin. But nonetheless, let's see how the price shakes out with all these different hacks. Then we have the Bitfinex hack. This was another big one, 120,000 Bitcoins hacked by apparently a couple from New York, who apparently most of that has been recovered by the feds like a year and a half ago or so. Nonetheless, this was a little bit higher Bitcoin price, actually about the same Bitcoin price at the time, August 2016, $600 Bitcoin. It's a lot of Bitcoins for one centralized exchange to lose. And this is the importance of not trusting centralized exchanges with your keys again. And then, of course, we had other hacks, Cryptopia, Quadriga in Canada. The Bitcoins were not as high there, the amounts. And then we have the FTX bankruptcy filing, the last most recent major centralized screw up in crypto land. FTX had a lot of scam coins. They had, of course, their main FTX token, which was just being printed out of thin air, used as collateral to back client balances and for Sam to take out loans on his joyriding penthouses, whatever he was doing with his life there in the Bahamas. Absolute pure and unadulterated fraud. Absolute pure fraud. Apparently they didn't have any Bitcoins, or at least any sizable Bitcoins. We'll see how many Bitcoins actually filtered through the Alameda wallets, any other laundered. As definitely listen to our episode with Mark Yusko released yesterday. Great investor, principal investor that had great stories about FTX and many other things. However many Bitcoins filtered their way through Sam's hundreds of shell companies that unbelievably folks like Sequoia and endowments and other Toronto pension funds invested in without any due diligence. They're apparently most of the assets were backed by the scam FTX token, and the actual Bitcoins, protocol level, on-chain level Bitcoins, I'm sure they have a lot still. Remember, tens of thousands of Bitcoins were being withdrawn early November. So a lot left the exchange, got out of the exchange, and many people started to take custody of Bitcoin at this point. But yeah, we'll have to wait and see when the dust settles how many actual on-chain Bitcoins, and not just made up FTX ledger balances, which had nothing to do with reality, how many actual on-chain Bitcoins FTX had in its custody and its wallets, we'll have to wait. But apparently it was not that much. It was actually not that much because this was good old-fashioned fraud and embezzlement. So basic timelines here. Let's see how the price shakes out. Let's look on a linear scale here to begin. Let's put the best fitting trend line across the Bitcoin price over the last 13 years on the power regression trend line. And here it is. 95% R squared. This is a great fit. This is the best fit we've seen of any trend line we've analyzed, gold, silver, or Bitcoin. The power regression on Bitcoin, a 95% R squared. It means the data, the price, moves around the regression trend line with 95% less variance, or 95% better than the price would move around the average during this time. And the average is about $8,500 per Bitcoin. So obviously during this time, when the Bitcoin price, during 2010, 11, 12, 13, 14, 15, Bitcoin could only dream of an $8,500 average price. So of course, the variance is much greater here than it would be around the trend line, and we'll dig into the log scale to see this better, but let's just pick a date, November 2012. The Bitcoin price was $10.90. November 5th, 2012, the power regression drawn here, based on all of the data, the all-time data, was $23. So that's a great fitting trend line. You can just use your eye test, use common sense to see that the fit here is much better than the all-time average. The variance is pretty good, 95% R squared. Even though, yes, Bitcoin is a volatile asset, which we'll talk about. So this is the power regression trend line throughout the life of Bitcoin's price. So let's now do the next best thing we can do with trend lines, and that is draw percentile bands. These are bands that are going to show how likely an event is to fall within some range. So let's start with the 1 sigma down and the 1 sigma up moves, okay? And I'm tracking this just like standard deviation, even though these are percentiles and this is a trend line, not the average. Standard deviation assumes a mean over a normal bell curve. Finance doesn't work like that, but it doesn't matter. We can take all of the data and run percentiles, as I've done here. So everything inside these blue bands, every time the price hits inside of these blue bands, it's a normal 2/3 of the time standard deviation like event or 67 percentile event. Okay, so it's 2/3 of the time the price is going to be inside these blue bands. Let's draw the 2 sigma down and 2 sigma up lines. Here we can see it's not a normal bell curve because the 2 sigma up is way high. Anytime the data is inside the red lines, now, anytime the price is inside the red lines, it's a 95 percentile event. It means it's a very common event. And anytime it's outside of the red bands, it's a 5 percentile event. The opposite of 95%. It's a very rare event if the price falls outside of these red bands. All right, let's reset the zoom. This is where you're going to see some pretty wild Bitcoin prices and fun prices if you're bullish about Bitcoin. Remember, we typically go out to December 31st, 2030 in these basic analyses. Let's even take out the standard deviations just for a second. Let's predict again to remind you based on the current power regression here. Let's go all the way out to December 31st, 2030, $675,000 Bitcoin. That is the 95% power trend line, power regression. That's what's being predicted out in December 31st, 2030. And again, let's put the bands back in. All right. This is where we can see the range is quite big. Let's look at the 2 sigma down move. All right. 2 sigma down means that it would be quite rare, but Bitcoin could hit it. What's a 2 sigma down move by 2030? $250,000 Bitcoin. What's a 2 sigma up move? 2 sigma up move. All right, so a 5% move, an outside of 95% observation, $4.5 million Bitcoin. Okay, now, obviously, when you get to this point, on a linear scale, it's pretty hard to see, pretty hard to understand. So let's go ahead and do the log scale and get a little bit of a better view here. And there we go. All the way out with prices predicted all the way out to 2030. Remember, log is interesting. It can go either way. Remember, we went from a concave up curve on linear, all right, concave up, which means the bump is facing down, to a concave down curve on log. The bump is facing up. Power curves can do that. They're different than exponential curves. Remember, the gold power curve on linear scale was concave down, as opposed to the Bitcoin's power curve on a linear scale, which is concave up. So power curves can be a little bit weird. They can be a little bit different, but typically when you put them all on log scale, they will all be concave down. And then if we go log, which I'm just going to blur. Remember, I had issues with my my x-axis here. We compress the right side of the axis. We expand the left side of the axis. So all of a sudden we're out, May 22nd, 2010 is way here across the chart. A power curve will be a straight line on log scale. But let's take log bottom off. I'll get that x-axis fixed soon. Nonetheless, it's drawing correctly on the chart. There you see it's a straight line. Power curves are straight line on log. But here we have a log scale on the left, and we can really see the early years when we do this. Okay, so the first MT Gox here in June 2011, we hit about $30 Bitcoin. I'm not sure I pick it up here. Yeah, $35 Bitcoin, June 10th, 2011. This is a 2 sigma move. This was a 2 sigma move. You see that it was outside the red line. All right, I know the tooltip's slightly blocking it, but you can see a 2 sigma up move on June 15th, 2011 would be $11 Bitcoin, and Bitcoin was $35 on June 10th, 2011. So $10, $11 would be a 2 sigma move on June 10th, 2011. The price was $35. All right, we see the same thing in the 2013 boom. We were close to $1,200 Bitcoin, and a 2 sigma up move at the time would have been $665 Bitcoin, so well above it. And then let's even take the ones. I find sometimes the 1 sigma just clutters it, so let's take the 1 sigma moves off here. Let's just look at 2 sigma. So everything inside these red bands, you're looking at 95% of the time. This is the beauty of trend lines, is that once you get a trend line, and hopefully the trend line's a pretty good fit, as this is, 95% of the time, the price is going to be within these red bands. So it was a 2 sigma move up in December 2013. And then we went into the crypto winter after the MT Gox hack, Bitfinex hack, so on and so forth, although we were trending up by that point. But look how the 2 sigma down move, interestingly, acts as some long-term support here. We don't need to do any weird Fibonacci rainbow lines in TradingView or anything. We can just straight up calculate mathematically a power regression, draw the bands, assume 95%, which is typically 2 sigma moves, and it acts as pretty good support here. All through the crypto winter, the 2 sigma down trend line. And then notice, again, this is why finance is not a bell curve. Notice how the 2 sigma up move is farther away from the trend line. You notice how there's a bigger gap there. You could just see the regression here. Let's just look at August 22nd, 2015. The price was 230. The regression line was 570, so the price was under the regression. 2 sigma down was only 210. You only needed to go, roughly another $260 down to get to a 2 sigma down move. But 2 sigma up already at this point in August 2015 was $3,880. So that's not a bell curve. You can see that's not a bell curve. That's skewed to the downside or skewed to the left if you looked at a histogram. That's just typically how finance works. The air is more rare up above. Okay, so these booms that we've had in Bitcoin, you'll see this with exponential trend lines and other markets. The air is just more rare up there. People have those animal spirits, as the great Alan Greenspan said, somehow they just get crazy, the madness of crowds, so on and so forth, and they buy. Really, at times where long-time holders should be selling, but the prices typically are unsustainable. Even though we get to higher highs eventually later, the booms themselves are pretty short-lived. And I just remembered that still, you might be listening to this on a Apple podcast or something that you can't see the video. So for those that haven't seen my face, yes, I was being facetious when I said the great Alan Greenspan, the maestro, as the New York Times called him, certainly had nothing to do with the financial crisis in 2008. Nonetheless, I digress. Here we have the power regression actually acted as a breaking point or support here in 2018. Remember this big puke in November 2018. Again, the 2 sigma down support. We come to the COVID years. We went down. Again, support at the 2 sigma down line. We popped up in the meme stock, Robinhood, synthetic Bitcoin trading of the 2020s, 2021. Went to all-time highs twice. Interestingly, a double top for Bitcoin, about $60,000 Bitcoin, over $60,000 Bitcoin twice. Once in March, the other time in November. So pretty interesting there. But we weren't even close to a 2 sigma move at that point. Not even close. This was well within a 95 percentile move. Let's put up the 1 sigma up. We did break a 1 sigma move during these bumps. We probably kissed it on the second time, definitely broke it the first time. So again, the way to interpret the 1 sigma up is that is outside of a 2/3 event, so 33% of the time. And you even divide that number by half, because remember, there's the direction to the upside and there's the direction to the downside. So 33% divided by 2, 16.5, 17%. That was a 17 percentile move outside of the normal regression, the normal bands for Bitcoin during this time. And then we get to today. Let's now zoom in. Let's zoom in here. So should have done this probably earlier, but we have again we have the 1 sigma up I'm showing. So we broke that. Bitcoin broke that in early 2021, late 2021, and then we started to trend down. FTX fraud comes, Luna fraud, all these other nonsensical things in crypto land. Typically, they inflate during the bubble and then they deflate quite quickly. FTX files for bankruptcy here November 11th and 12th, 2022. But then look at this level that we stayed at, this 15, 16, very briefly 15 and 16, $17,000 Bitcoin for a couple months until really just a couple weeks ago, January 11th, we started to break out of that range. But look at that, very, very close. Just take the other sigmas off so you can see even more clearly what I'm pointing to here. The 2 sigma down line outside of 95%, or really outside 97.5% of observations, because remember, this 2.5% below the bottom red line, 2.5% above the top red line. So this is a 2.5 percentile event, and it acted pretty much like support. So that's pretty interesting. And now we've bumped up to the low $20,000 Bitcoin price as of the recording of this video. So that's really all I wanted to show today. It's a interestingly well-behaved power regression. That is the Bitcoin price versus time over the last 13 years, a 95% R squared. You don't have to do anything fancy, no stock to flow, no multiple variable inputs. This is just one independent variable, that's time, one dependent variable, that's price. And we see that the 2 sigma down has generally acted as support for the Bitcoin price, and the 2 sigma up has certainly acted as resistance and just signaling very, very rare air, where if you are fortunate enough to sell at that point, it has shown to be a good idea to where you can accumulate more later. But again, this is not financial advice. Past performance does not equal future results. All of that stuff. Say it again and again and again. I'm sorry, but I guess that's just the way to do it these days. It's a pretty interesting chart. Pretty interesting chart. We can see that this is a more reasonable, if you remember our 2030 prediction, even though it was great, and I'm sure a lot of people would love it, on the exponential curve, the exponential curve was something like 100 million plus. I think it was even 180 million plus price per Bitcoin based on the exponential trend line, which really fell off in the last year. I'm not saying it doesn't get back on that trend, but the power trend, which is this sort of more gradual concave down type of a curve on log scale, has traditionally looked really, really good for Bitcoin. So again, past performance, definitely not financial advice, does not equal future results, but it's pretty interesting. And yeah, so please let me know in the comments if you like this, if you want to see more trend lines regarding Bitcoin. We got lots of charts to show coming up, but I thought that we'd just get back to a very, very perhaps fun look at the Bitcoin price in light of recent centralized traumatic events for crypto land. Definitely do not leave your Bitcoin on exchange. If you can manage to self-custody yourself, and better yet, multi-sig, better yet, have it in many geographic locations so you have no central point of failure. Take care. Be careful out there. Thanks for watching.